financial news. Always remember, today's a great day to make some money, and let's try to be just a little bit better than yesterday. A couple of quick announcements before we get into the daily financial news. First and foremost, we will be doing a live Q&A session 8 a.m. Saturday tomorrow, March 27th. You can count on it. I will do it right there from my computer. The whole goal with the live Q&A sessions is I just answer what's top of mind. What are your questions? What I've seen in the YouTube analytics is we have just a tremendous following of repeat listeners or daily listeners. Something like 2,200 of you come back every day, and I thank you for that. What we saw this week for the first time is we are really starting to attract new listeners. What was it, last Wednesday or Thursday? I'm sorry, Wednesday and Thursday. We actually had new listeners exceed returning listeners. So looks like this daily financial news is getting traction. If you're new to the channel, welcome. We do this 7 days a week. Yes, weekends included. We do it 6 days a week at 7:30, and then on Thursdays we do it at 7. These are all Pacific times. Then in addition to that, you can find me interviewing multimillionaires Monday through Friday, talking about what is going on in their business, trying to help you. Saturday, as I've said, is live Q&A, and then Sunday is for either student mentoring, which something was recently released, or I just kind of summarized the week. So that's what you will find on this channel. Next, we have sold over 1,000 copies of One Rental at a Time this month. I want to thank each and every one of you for your support, for your recommendations, for your selfies. Something I would love to do today, if you could take a selfie and maybe tag me on Instagram. I got several of those in the last couple of days, and they really do put a smile on my face. Feel free to take a picture with you at the book, maybe your scenery. Yesterday or the day before, I got a picture of One Rental at a Time in the back of somebody's truck with lots of tools, which was just awesome. So if you could do me that favor, that would be great. And then lastly, before we get into the news, if you could give me a 5-star review on Amazon or Audible, that would be wonderful. We are getting so close to 500 Amazon reviews. I would love to see us get there in the next week or so. So if you like what we do here on this channel, you enjoyed the book, can you take 2 minutes? Go write a quick 5-star review. Even if you just say great book, highly recommended, I would greatly, greatly appreciate it. So a couple of things as we wrap up the trading week on this Friday. I just saw that WeWork is going public. Remember when we talked about WeWork a lot in 2019 as this unicorn stock once valued at $45 or $47 billion imploded? Well, they're going to go public via a SPAC. In my opinion, just yet another sign that this SPAC or blank check phenomenon is going to end miserably for lots of people. But they're going to go public via a $9 billion deal, which is roughly 20% of its past valuation. So quite the haircut. In the past, they've exited 100 locations that were not performing, right? Clean up their inventory. They now have switched to predominantly yearly leases versus monthly. Shocking, good idea. They also now count large businesses as 50% of their income versus 10, right? They were very dominant in small companies before. So again, WeWork going public. I just remember our daily talks back in 2019. Next thing we have is the Fed is going to lift the restrictions on most of the big banks and allow them starting June 30th to start issuing dividends and performing stock buybacks. I don't know how you feel about it, but I think that is not a great idea. Think about what's happened the last, what would you say, 15 months, right? Between whatever March and what will be June 30th for them. Well, they really haven't been able to absorb bad debt, right? Because again, they weren't writing things off. There were foreclosures. There were all of that stuff. So, I mean, none of these foreclosures really happened. No frustrated landlords really sold out because of the evictions and foreclosures. Also, banks made a ton of money because of refinancing, right? Just all the transaction fees, and they had a willing buyer in the Fed buying them, right? Mortgage-backed securities. So, and of course, they were not paying you and I interest. Not that my savings rate was anything to write home about last January, but damn, there's nothing now. So, banks have been making tons of capital the last 12 months. We'll make it the next 3 months. And then they're going to change the rules. I'm not a huge fan of stock buybacks. I think they're a poor use of capital, especially for banks having, and then myself having lived through the 08, 09 crisis. And I also don't think next year is going to be as friendly to banks. I think there is some dirty laundry out there that they are going to have to absorb. But lo and behold, the Fed's going to let them pay dividends, do stock buybacks. I think it is pretty piss poor timing, but we shall see. Don't know if you're following this, but there is a container ship, a monster container ship, kind of turned sideways inside the Suez Canal that is stuck, and they are going to have to work to free. This is a problem because the Suez Canal is a transportation lane that is used for shipping. Some things that I didn't know. I didn't realize that 80% of our global trade goes via ships and container ships. So there's a lot of stuff stuck. Companies now are having to reroute around Cape Horn, which for many of these providers adds somewhere between 15 and 25 days to transport that around. So expect to hear some very unusual supply chain issues coming. This just-in-time model that was the highlight of the 90s, I guess, and we have all come to, this world trade. We are about to see what is going on. I've heard there's, obviously auto manufacturing parts, there's exercise bikes, there's even cheese in there. I mean, like, there's all kinds of stuff that I think is going to be a supply issue. So I expect in early part of April, we're going to hear some, oh my God, we don't have any more X, Y, and Z. That's because just in time came back and bit us when things got stuck. What else do I got for you? Oh, I saw this today. I have a question for you. So we all know the 10-year note is below 2% today, but I read a note. It was really a proposal, right? There were these things that were used back in the Obama administration called, what are they called? Build America bonds. Basically where the federal government empowers the states or municipalities to borrow or use them, and then the federal government subsidizes the interest rate. So it's kind of a combination. But many of these bonds could pay 7% interest for 10 years. I looked at that and went, 7%? Interesting. I'm making nothing in my savings account. And I asked myself, would I ever buy these bonds? So I wanted to ask you. Let's say you had $10,000 or $5,000 or 50 or 100, whatever you have, and you're not earning anything in your savings. Would you sign up for a 7% bond backed by the U.S. government? Let's say it's, due and payable in 10 years. You get monthly interest payments or quarterly or whatever they are. Actually, I don't know. I've never looked. I never bought a bond. But again, 7% in an environment where 10 years are 2% might be worth a look. I don't know. I might have to look at that. And then lastly, KB Homes reported the other day, and I caught an interview with their CEO, Jeffrey Mesger. Hope I pronounced that at least close to correct. Looks like he's been a real estate professional for 40 years, which if you do the math means he was doing this thing in the 80s. That is 20 years longer than I have. And these are a couple of things that I took from his discussion. Obviously, bidding wars and cash offers are dominating the market. No kidding. They have 74% increase in backlog. KB Homes is slowing down builds. They're releasing smaller plots, 5, 10 at a time. Pretty crazy. They have record profit per house. So you and I have been talking about lumber being up somewhere between 60 and 200% depending on the piece. But lo and behold, KB Homes is making record profits per house at $41,000. $100,000. I didn't look this up, but I wonder what KB Home's average price is. I'm going to guess it's in the high twos, maybe. I have to look that up. But let's just say rough math, if it was 200 grand to make it easier, or make it 300 grand, make it 300 grand. That means their profit's over 10% a house. That's pretty good. And then again, what he really wanted to highlight is builders, himself included, his company included, have been underbuilding single family homes for 15 years. So there's a lot of pent-up demand, especially with millennials now becoming first-time buyers at a greater and greater rate. So he calls this the best market he has ever seen. And again, this gentleman has been doing this for 40 years. He has invested through or been building in '06, '07, and this market is the best he's ever seen. So that's what I got for you today. What do I got? I'm being interviewed twice today on podcasts at 9 and 10. I will try to do a couple of live streams just to keep the flow going. I hope you have a wonderful Friday. I will see you tomorrow for our live Q&A. And if you want to seed questions, if you want me to start with your question first, leave comments below or leave the question below because I will come back to this video, look for any questions so that we can start answering them right out of the gate tomorrow at 8 a.m. Have a wonderful day. If I don't talk to you, have a wonderful weekend. Take care. Bye-bye.